Oil prices are on their longest winning streak since August as production reductions in Libya and Canada add to rising concerns surrounding the intensifying situation in Syria. But rising US shale oil production is limiting those price gains. Mike Ingram of BGC Partners is here with me now. So do you think this rally has now run out of steam?
Well, what may have given it a little bit of a leg up at the moment is the news overnight that we've seen the largest field in Libya shut down. That's probably taken about 200,000 barrels a day out of the market. But what we really need to see in the forthcoming OPEC report for March is evidence of better compliance, both within OPEC, certainly the non-Gulf states. Producers such as Iraq have shown relatively low levels of compliance, and also critically some of the non-OPEC players which are also subject to that agreement. I think Russia is clearly front and centre there. They were expected to deliver 300,000 barrels of reductions against the October production levels. They've been relatively slow in forthcoming with that. They maybe have got to about the 200,000 barrels a month mark by the end of March. They need to be evidence of further progress on that. And then on top of that, we need to see a renewal, a refresh of that 6-month agreement from June to the end of 2017. Otherwise, it's going to actually difficult to keep, I think, the oil market in deficit.
It seems like OPEC isn't the main driver at the moment. It seems like there's other factors at play. Obviously, we had the situation in Syria driving the markets. He's adamant he wants to pump up these rigs. The Baker Hughes numbers go up every single week, and the supply factor in the US shale industry.
Yeah, and also one other sort of relatively minor issue is the dollar. The dollar is actually still down for year to date, so that's tended to support all commodity prices denominated in dollars. Yeah, you're right. I mean, I think if you look at where US production is, it troughed in September of last year. We're about 500,000 barrels a day up from that level as of February. It looks as though we're going to continue to climb. We're still more or less 500,000 barrels short of where it peaked in 2015. And really, if you look at the sort of the broad sweep over the last 2 years, what did this price squeeze actually do to US shale? Yes, it curbed production, but it also allowed the industry to restructure, to refinance. As you touched upon, Trump is very much pro-energy security. He's rolled back a number of environmental productions. All of this helps the oil industry. Against that backdrop, you have to wonder, it's all very well for OPEC to tighten up compliance, all very well for players such as Russia, perhaps to also play their part in that. But when you've got US ramping up production, Canada ramping up production, Brazil ramping up production, they're having to run very, very hard just to stand still. The calculation at the moment is that if you get 100% compliance with the cuts that OPEC and the non-OPEC countries had agreed at the end of November last year, then you push the market into about 500,000 barrels a day deficit by June. We're not quite there in terms of compliance. I mentioned Russia and Iran in particular, sorry, in Iraq in particular, as being particular areas of shortfall. But you need that agreement to be refreshed in June. If all of a sudden you just go, job done, boys, at the end of June, and everybody starts pumping like billios, you're going to. So to some extent, it is kind of billio. It's kind of binary, because if you get better compliance with this production agreement and a refresh, you could see oil going to 60, 65. If you see this agreement falling away, then I think you're going to see a lot more oil coming to the market, and you could see oil go down even sub $40. So one thing I'm fairly sure
you're saying it's all resting on that pretty much in terms of the price movements.
Yeah, exactly. I think we need to see just how that agreement shaping. At the moment, my understanding is that 6 members within OPEC are in favour of refreshing this deal. I can pretty much guess who those 6 members might be. Venezuela is definitely one of them, but it's not a done deal yet.
So if we do get complete compliance and an extension, you're saying 65 a barrel is a realistic number? Yeah,
which is within the range of what OPEC was actually at the upper end of.
But what about if we add to that 65 the tensions in Syria as well?
Well, I'm not sure to what extent the situation in Syria, as we understand it at the moment, is really going to add that much to the oil price. I mean, after all, Syria of itself isn't really an oil exporter. It doesn't produce hardly any oil at all. I think it's only if you see a much broadening of the conflict within the Gulf, and you start to see sea lanes, such as the Strait of Hormuz, being threatened, then of course you are going to see some premium, some risk premium being priced into oil. But as I said, when we had news of that oil strike, we did see an immediate impact on the crude oil price, but it gave most of that up within 24 hours.
OK, we'll leave it there. Mike Ingram from BGC Partners, thank you very much indeed. And we are awaiting that OPEC report that's due out on Wednesday. Thank you very much indeed for watching. Goodbye.